I want to start on net interest income because the takeaway from all the banks that reported today is that we saw peak NII in 2023, and Wells is now projecting a 9% slide for net interest income for 2024. What happens next? I mean, after that 9% drop off, does it plateau there? Do you see the trajectory going down? What's going to drive it?
Yeah, well, first, thanks for having me. You know, when you look at net interest income, you know, what's playing out is exactly what has been, you know, projected now for the last couple quarters. You know, we've seen net interest income come down a couple quarters in a row, and so you're annualizing and coming into 2024 at a lower level than you did, you know, just a couple quarters ago. You know, some of that is the rate expectations, and as you all just pointed out, you know, the market is now projecting some rating decreases as we go through the year. You've got muted loan growth in most parts of the portfolio, with the exception maybe being credit card. You've got a little bit more of a decline in consumer deposits coming, and so all of this sort of adds up to an NII projection that could be potentially 7 to 9% down. We gave a range today as part of our call, but it's very much what we've all been expecting to happen as we go into this year.
I want to pick up on what you said about muted loan growth, because in the earnings call you mentioned that muted loan growth at the start of the year, but a bit of a pickup later on in 2024. What kinds of businesses do you expect to be the main drivers for that pickup?
Yeah, well, when you look at what's been happening now, probably for the last 6-9 months, is that many commercial customers have been very conservative, or very much being thoughtful about how much inventory they build, how many investments they make, as you still had rates staying pretty high and a bit of an uncertain economic picture. So as you get more clarity there, we think over the next 6 or 9 months you'll start to see more of that uncertainty lift. You'll see a little bit more investment. You'll see a little bit more demand for credit on the commercial side. You'll also see, some continuation of the credit card growth that we've seen now for the, year plus. And then, everything else we'll kind of see how it plays out. But I think those are going to be the drivers as we look. And so the first half of the year, we still expect it to be pretty muted. Hopefully it'll start to pick up as we get later in the year.
Mike, let's talk about expenses and headcount here, because looking backward, your compensation expenses came in ahead of expectations, and looking forward, Wells Fargo looking to shave off another $1 billion in expenses this year. Is reducing headcount part of that conversation?
Well, what you saw in the quarter, we booked some severance charges that continue some of the efficiency work that we started a few years ago, and so that's embedded in our run rate. But when you look at what we disclosed, we expect to have just under about $3 billion of efficiency impact come through in 2024, offset by normal merit increases and investments we're making to some degree. But that efficiency story that we've had is very much part of it, and I think you've seen our headcount come down now consistently for a while, and I think you'll see a little bit more of that as we go through the rest of the work that we'll be doing over the next few years on efficiency.
Okay, so a little bit more there. Let's also talk about private credit, because last year you announced a private credit partnership. It's been a long week with Centerbridge. How is that going so far, and what's the Wells Fargo view on private credit at this point?
Yeah, well, we're really happy with the way that partnership is starting to progress, but it's just getting started. It's just becoming operational around now, and so we have some pipeline of deals, but it'll take some time to ramp up. But we're pleased with the partnership that we've got with Centerbridge so far. When you think more broadly, many of the private I'm having the same problem you're having on private credit, but having private credit players are big clients of ours already, in our investment bank, and so we work with them quite a bit, day to day. And then when you just think more broadly, I think many of the loans or the assets that are going into those funds today are not something that a bank like us would want necessarily on our balance sheet. And so finding creative ways to partner with people like Centerbridge is one of the ways in which we'll continue to be able to offer our clients the availability of those types of products.
Thank you for explaining that. I want to go big picture here, Mike, and talk a little bit about what Wells sees for the broader economy ahead based on your position, your role as a lender and consultant to so many different kinds of companies. With all the talk about the U.S. economy achieving a soft landing and expectations of rate cuts later this year and so on, what is your high-level view on U.S. companies and businesses right now?
Well, I think it's clear, many consumers and many commercial clients are in really good shape. When you look at the aggregate numbers across both of the different, types of customers, people still have a lot of liquidity. The credit performance has been strong, even though you've seen delinquencies and charge-offs increase off of the historic lows. Now, that's not to say on the consumer side, there are a population of folks that are more stressed, folks that are, have lower income or wealth levels. The cumulative impact of inflation is definitely causing some stress for them. That's not a big part of our portfolio, but you should expect to see that kind of play out over the next year or so. On the commercial side, again, we're seeing good performance across most sectors, most clients, and I think that sets us up well as we go into the year. Mm-hmm. Now, most economists now are projecting kind of this soft landing. Our own economists came out with their updated forecast today and are also now projecting that. But I do think, I do think you have to be prepared for other scenarios. We're hopeful that that's the scenario that will play out, but there's still a lot of uncertainty and risks that are out there that could cause it to deviate from that base case. And so, we're thinking about all those different kinds of scenarios. But right now, it's looking, the consumer and the commercial customers are set up pretty well.